Good morning, everybody. Ready to get going? Let's do some Forex. Booyah. Hey, good morning, everybody. Welcome to Forex.Today. It is Thursday, October 13th. That's a Thursday. Another opportunity to trade for some Forex, huh? Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. You're going to get what you give. No, you better give it all you got. Gonna get what you give. Something like that. Hello, my name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. I'm here every single morning, 7:30 a.m. New York time, which is approximately London lunch. Great opportunity for a community of foreign exchange traders to get together and realign their satellites and collaborate, share ideas. We'll cover some technicals and fundamentals. Cool. Monday through Thursday here at Forex.Today. And every Friday at FX Street for premium members. But also at FX Street, I am Forex Speaker of the Year. It's a real nice honor to have. And all of this just to make you a success. So to pay it back, to show some respect and loyalty, open up an account at TradersWay.com. Will you do that for me? Yeah. Hello. Charles says done. Thank you, Charles. Ryan, Traders Way ease the bees. Thank you, Ryan. Michael says need some more learning. I'm good with that. You can open a demo account. So anyways, thank you for your loyalty. And Michael's abusing that. I'm cruising, I'm never bruising. I got my Traders Way demo account, and this is what I'm doing. Around the way is where I'm from. I'm from Manhattan, and I'm not a bum. Yeah, cool. All right, so what's going on in the world? Lots, really. Brexit's still killing euro or pound. Yeah, shocker. Newsflash. Right? Great. Okay, cool. You should already have that going on. Great. Chinese export data, no so good. Chinese yuan near a 5-year low or 6-year low, something like that. Yeah. Pretty interesting stuff. Yeah, Russ is talking about big short squeezes and stuff. Yeah, well, take your profit, dude. Right? We're just, I mean, the funny thing about where do short squeezes show up, right? Double bottoms at obvious support. So if you're worried about a short squeeze, take your profit instead of hoping it'll go farther, right? Cool. So anyways, yeah, the Chinese yuan stuff, no so good. Exports are still not good for China, which really means other countries are not importing. U.S. is importing a fair bit amount, so it's just basically the Europeans and now the Brits have decided to ruin their economies, and they're becoming more and more poor. which is the whole point of socialism. Nobody wins and everyone has a life that sucks just as bad as his neighbors. Good. Well, good job, Europe. So they're not importing stuff from China very much because they're working their way into poverty. Great. So that's going to hurt China for a while. But also think about, commodities. Isn't that the same thing that's going to happen to oil? We have over the last year we've had two issues: way too much supply and not nearly enough demand. Well, we're working on the supply side issue, right, where OPEC and friends are getting together and thinking about maybe doing possibly something, perhaps, kind of, and then, right, and hopefully not cheat, but maybe do something to address the supply side stuff, right? But it does nothing for the demand side. So demand side is going to have to come from expanding global macroeconomics. So anyways, bad. I don't think it should be a shocker. Let's say that the Chinese data was bad, but it's just everyone's hoping for better. But there's no real, right? There's just no. It's not a surprise. There's just how you say, wouldn't it be nice? Wouldn't it be nice if it was better than expected? But no reason for it to be, right? Yeah. Ryan says China bad. Well, the numbers were only disappointing if you were hopeful. The question is, well, why were you hopeful? What was it in the analysis that said it could have been strong, right? So, anyways, whatever. So then we move over to the Fed stuff, and it turns out Grandma Yellen was the one that held it back from a rate hike in September. That's what it looks like. It was good enough for further liftoff, but Grandma Yellen held it down. She's the boss. Why'd you do it, Grandma? Because I can. So, anyways, that's interesting, right? So we're looking at almost 70% chance now of a rate hike in December. Gumi says better than Bernanke. Are you saying is Grandma Yellen a better chair than Bernanke? I don't think it's a fair question yet, because at this point, Grandma Yellen really hasn't done anything. Okay. Okay, so I don't know if I can judge her yet, but I'll tell you what I thought about Bernanke, because I was around when they nominated him, and in fact, I never heard of him before because central banking was still fairly new to me. So I'm like, what? There's somebody else besides Greenspan? So I'm like, Bernanke. And so I went out and I bought his books. Turns out he was a professor at Princeton, and so I'm like, he wrote some textbooks, so I bought them. And then he wrote some books were published about his research in the Great Depression. So I bought those, and I think this was like 2007, maybe 2006. I can't remember whenever it was, but it was before the crash. And I'm like, wow, this guy's an expert in the Great Depression. Boom! Hey, look, another depression. So, I'm not going to talk whether the Fed is good or bad. A lot of people are very passionate about that. But the things that I thought were really interesting is the initial response to the subprime mortgage debacle was, it's just subprime. It's not going to spread, right? Yeah, okay, that was a mistake. And around the same time, the Bank of England said, it's a problem for the Yanks. Like, British banks were not invested in the U.S. real estate market. Yeah, okay. So no one knew what it was going to be. And then finally it hit like, oh my God, everything's going to crash, right? When that hit, Bernanke did things that no other central banker had ever done before. And that's like coordinated responses. He picked up the phone, and called other bankers. And like the first response, there was something like 7 central banks worked together all at once. Stuff like that, I thought was brilliant, right? And then when things got even uglier down the line, when it hit the general economy, they did things like Bernanke worked with Treasury. You had Geithner, and then you also had Hank Paulson, and then they had to go to like Congress and get additional powers for the Fed to do things like bail out non-banks and stuff like that. And it was, these are tests that generally no central banker ever had before, really. I mean, maybe the Great Depression when the Fed had to make some changes, but it's just interesting to say, like, how many central bankers have lobbied Congress for additional emergency powers? Like, okay, Bernanke. All right. Whoever did coordinated responses to a global financial crisis amongst, the G10 central banks? Bernanke. So on and so forth. So whether you agree those are the right decisions or not, I don't know. America's filthy, stinking rich again, and everyone else is still in financial caveman days. So, okay, fine. It seems better. On the long run, though, if you follow, like, I don't know, a Hayek point of view, the bank should have failed. But if you follow the paper trail even farther, it's not the bank's fault. It's the government's fault for creating an environment in which the banks just simply did what they were supposed to do and make money. That's what banks do. But the system was screwed up, and it made them, not made them, but it gave them the conditions where they took too much risk because they were just simply selling the risk back to the government because that's what the government wanted them to do. So they did it, and they did it a lot because it was like printing money. It was great. They'd give somebody a mortgage, and then they would sell it to a GSE. Didn't matter. GSE didn't care about the quality, so that's the market that they were given, and it's their duty and their natural behavior to make money. You can't yell at the tiger for eating the goat. That's what tigers do. So anyways, yeah, so way too much risk was taken, and then it all crashed, and the government had to pay for everything, but it was the government's stupid fault in the first place, so I don't know. What are you going to do? All right, so this is oil. This is where we left yesterday. I think we were sort of up in here, right? And we had it coming down. Is that right? As long as it stays below 51.50 to be short, right? I believe that's where we left it. So it looks like we were right. You're welcome. No, 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 no. Spank you very much. That's a little bit on the high side here, isn't it? A little bit high. So I might almost think it comes all the way back up to 51.50. If I was a bear, I would want it to stay kind of below this 50.50, right? But now we're all the way up here. So we got to keep an eye on that. You didn't watch The Life of Pi? Or read the book? Yeah, yeah. There you go. I have this fancy dentist when they put you in a chair and it vibrates and it's warm and it gives you a back massage, and they put blankies around you so you're all snug, and then they put headphones on, and when they lean you back, you can see there's a movie on the ceiling, right? They have an LCD up on the ceiling, so you're laying down and you're watching a movie, and they let you pick the movie, and I'm like, I don't care. And they're like, how about Life of Pi? Fine, great. Life of Pi, great. So I'm in there, and I'm having my teeth done, my back's being massaged, and I'm all in my little blankie, and I got nitrous oxide going, feeling good, right? And while they're working on my teeth, the scene where the tiger in the boat attacks the orangutan and eats it alive, that's what I was listening to in my headset as they worked on my teeth. Now that is a good day. Listen to an orangutan being eaten alive while you're getting holes drilled into your teeth. Yeah. Boom, 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 boom. So one of the things we've been talking about is if oil's going down and this is going up, right? Looks like the correlation is still there, right? Seems like it's all normal here. This didn't make a high enough, really, so we're kind of stuck mid-range here. Okay, stuck a little mid-range. Maybe there's Canadian-related news. It looks like the Canadian is a little bit overstrong, or the dollar has weakened, right? Okay. Just kind of looking around, Oh, one interesting one is this. Oops. Should I just close that? Oh, shoot. I just killed it. I just killed my. Did it? Jeez. Gold dang it. Anyways, yeah, did you. You see that? Yeah, so, anyways, that was a good place to buy. It's gone now. Yay! I love making money. Yeah. Shoot. Anyways, that was a good place to buy. I was just long. I just got taken out for profit. Too bad. So sad. All the hard work is done now, and now I'm out. Great. But clearly support, and I believe we did this yesterday. We threw this line down. Okay. So do you remember the whole idea? Identify the next two levels of support in which in which you may consider buying. One's here. If that, the next one would be down in here. But really, this is a range play. Looking for noob in all the wrong places. Looking for noob. So, Yeah, Ryan's like, it was looking good. Oh, dang it. Okay. Oh, Kiwi. Oh, it's happening. Oh, it's happening. Wait. Don't go without me, baby. Don't go without me. Hang on. Kiwi. Yeah. All right. So we were working on this, if you recall from yesterday. Yeah, it's not far off, right? What did we do yesterday? Up to here, down, and then up and then down? It's not far off, right? I wouldn't call that horribly wrong. But check this out, what I'm all getting all googly-eyed about. The 1, 2, 3. See it, Bubba? You see what I'm getting at? See, it just happened in the last few minutes. Oh, dang it. Okay. Did you try it? Thank you, Fred. Fred's like, hey, Barney. Hello, Freddie. And how do you do to you? Yeah, so anyways, Oscar Mike, right? I tried to warn you. So that's nice. So yen has been strong, in particular in Asia. It was a bit strong, and it had to do with again sort of risk off like the safety stuff. Aussie took off partially because of a weekly pivot. There's kind of a monthly in there somewhere, that kind of stuff. So we'll see. Right now, U.S. dollar is weak across the board. Euro dollar's coming up to some pivots. Might be a dead cat bounce. Just time for a breather. Just looking around. Oil is trying to make a move. Did I see that when didn't we just cover oil? I think we just got like a candle on it. Yeah, it's starting to move. I'm going here. Wrong one. Yeah. Look at that. Higher high, higher low, higher high, higher low, higher high. But again, make your decision of whether you want to be a bull or a bear. If you wanted to buy it, 50 was the obvious, ridiculous, disgustingly obvious place to buy it. It's 50,000, right? So doing it now at 50 and a half, 50, 70 is way late into resistance and all that kind of stuff. It'll probably go to 51, but still buying it at 50, 75 is dumb. But it is starting to move as the market's open. If you thought this was going to go up a little while, and maybe even more, depending on news and stuff like that, you might want to play the Canadian dollar because it's not going to have the same psych levels. Weekly M3, I believe that's our weekly top, is that right? Yeah, so if it reverses, we're going to go down to weekly M1, but it looks like an S2, R2 or S1, R1 kind of weak, doesn't it? But whatever, it might just be sideways. It's an interesting cluster though, right? If that held, that puts us, what, monthly R1, where's monthly S1? That puts us down next week to 128.60 if oil went up again. I don't know. I don't know if I'm ready to drink that kind of Kool-Aid, right? Like, I don't know. I like grape. Something smells weird in this Kool-Aid. Like, no, just drink it. No, because it kind of smells like cyanide. No, everyone else is drinking it. Yeah, I don't, no, I don't want to drink that Kool-Aid. So here we are, right? What's going to happen here with crude? So we got the 50 level, solid on high. I don't know. Even when we were down at like 45, do you remember the theory? Is that there's really nothing fundamentally going on there. That I don't think it'll really go up. I don't think it'll really go down, and those plays are still there. Nothing demand has changed. There's very little demand. We're still oversupplied. We're still being oversupplied by suppliers. So nothing's really changed except OPEC's trying to work things out so that they're going to continue to oversupply us for the rest of the year and then maybe cut back and then just slowly oversupply us. I mean, so we're less drought. I mean, I don't know. Like if you can, I don't know. I guess we're arguing over like the difference between a 40-foot yacht and a 42-foot yacht. Like most people can't tell the difference, right? It shouldn't matter if OPEC only slowly drowns us in oil versus quickly drowned us in oil. But so anyways, maybe the equilibrium price is, and throwing in the psych levels and stuff, around 50 is probably where we're going to be for a while. There's no reason for it to really be lower. There's no reason really for it to be higher. Nothing's really changed except the OPEC deal keeps us away from the idea of 35 or 25, right? But I don't know. I guess if you're just going to be a trader on it, sell it on the high side, buy it on the low side. If you're an investor or a producer of something, I would say oil prices are likely to stay stable. Somehow I feel like there's a built-in risk on that. That can be shockingly wrong. What would it be though? Like a war? Don't see it yet. But I've researched the last 1,000 years of economic history. I'll tell you what, when you close borders, like what Europe and specifically the UK is doing and what Trump is talking about, if you close borders, within a generation, there's a war. It's amazing. You close borders, you stop trading with partners, and within a generation, there's war. Well, people need to eat, but there's also this idea that you're just not cooperating with people. So why, humans work, in my opinion, based on a lot of self-interest, right? And if you spend a lot of time, oh no, Wayne, I'm not a capitalist pig dog. I don't have self-interest. I spend a lot of time with my church and with my charity and with my, and I'm like, yeah, you're still doing it out of self-interest, dude. Makes you feel good, makes you feel powerful in your own way. But, but by all means, just don't pretend that it's not out of self-interest, right? So anyways, when you're working with somebody and it's both in your benefit, you both are better off because you're working together. Let's say like France and Germany, right? Being in the EU together, they're much less likely to go to war with each other, right? By open borders, I'm specifically talking about trade, not migration and stuff. I'm looking at it from an economist point of view. Now, I suppose even migration would help things like, bring in additional workers and all that kind of stuff. But this idea that if France and Germany are doing business together and both benefiting, they're not likely to kill each other. Because even if you don't like the other guys, the relationship's good. And you're like, well, I don't want to kill them. I'm making money off these guys, right? And same thing with England and France, and England and Germany, and Germany and Russia. And all of a sudden, if everyone is benefiting from relationships, and that's what capitalism is, and this idea of self-interest, you do it because it's good for you. You don't do it because it's good for them. You do it good for you. Now there's other things to do it. You say, well, but there's all these other benefits. Yeah, okay, good, 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 good. Yeah, yeah, yeah. But it benefits you, and therefore you do it, and it benefits them, and they do it, and these relationships happen and stuff. It's amazing when you start closing borders, those ties go away, and you're protecting your own stuff. Like, don't touch my stuff. It just simply leads to war, and I'm only studying the last 1,000 years of history. So, okay. Want to look at a gold a little bit? Let's use mm, mm. So where are we on this, huh? Funny thing is, I remember it at 350. It's a lot of history here. It's cool. It's like looking at an old friend. I haven't backed that far out. I remember somewhere in here, I was on the trade show floor in the Interbank FX booth doing a presentation on why you should buy gold, and I had a bullhorn. And I remember prices were like this way low. In fact, I remember it like 350, 450, 550, 650. It's amazing to watch it go to 2,000. Just wow. I think somewhere in here, December? Yeah, somewhere in here, I remember I was at another trade show in New York coming up and hit 2,000. Cool. Yeah, it was the one at the Marriott Marquis. Gotta be a little careful, huh? So this is supposed to make a lower low, and it didn't. Followed by a higher high. Okay. So if you're a bull, you'd have to buy you'd be a buyer now, and buying these dips, ideally off the 21. And if you're a bear, you're just kind of waiting. So we're so zoomed in, it might just be noise. But these are hours. Look like you have sessions going on here. But I think if you were a bull, you'd be doing this today. There's a lot of people that are just gold bulls. That's just, they like to buy gold. When you back out, it's not magnificent. Magnificent. But it's the beginning of something if you're a bull. You got to take a shot, I think, if you're a bull, especially if they open up a market. You got a fib retracement. You got maybe kind of a 1, 2, 3, or at least maybe it's not heading down, or maybe something. But magnificent. Ooh, I was born. I was born to trade with you. Let's take a look. So that Kiwi yen is being challenged by the 4-hour 21. I think it'll be very interesting what happens. If it breaks that, it's going to really kind of keep pushing its way north. Aussie's kind of doing the same thing. The nice thing about the Aussies, it's kicking off the daily 21. So why don't we look at that? Dang, I want more coffee. Gee whiz. And after that, boom. That's a pretty good guess there, huh? So it's 786, which even tells us we're probably not even going to get much past that. So this is already a trade plan from July. Yeah, yeah. Oh, yeah. I bet you I thought we were going to buy this up as 618 in August. We're supposed to be up here by now, in the mid-80s. $79.20, go, Ona says. $79.20. Yeah, sure, up here, but that just puts us here. That just gets us to 80 and some change, maybe 81, and then back down. And I don't know, and then that's it, right? Like, it's been so long, maybe even unthinkably long, since I was short a Japanese yen, or the Japanese yen, in the beginning of the year, right? So at some point, like, I feel like we're running out of time. So here it is, middle of October. 1 month from now, it's going to be U.S. Thanksgiving. And that's a cooling off period. And from there, it's a flip of a coin whether the yen gets strong or not. But generally in January, I'm usually buying yen. And so like I'm looking at this and we want it to go up, I get it. But I think like this kind of feels like we work our way up here, then it has to come down a little bit at least, and then what? Where does it go? I mean, and how long will that take? That might be the between now and Thanksgiving. And then you think it's going to do that in December? You know? Right? Like that's doesn't that doesn't feel that believable. You know, is it a rate hike, a Fed rate hike that does it? I don't know. So, you know, I bite my fingers on this one. What am I going to do, right? What am I going to do? And how's this going to be different from previous years? And that'll be the Fed hike. So one might want to look at what happened last year when the Fed raised interest rates in December. But what's the problem with that? Well, we kind of knew it was coming, kind of like the one we know was coming now, right? There's chances they won't do it, but that's the risk, right? But what we believe is going to happen right now, 69% chance they'll raise. So let's just say they'll raise, right? Great. But last year, it wasn't the raise that moved the market. It was that their dot plots told us, right, 200 basis points. The dot plot said 4 rate hikes in 2016. We haven't had any yet. So I don't know if I can really use that and say that's what's going to happen this year, right? So I got to just be fluid and open-minded, but focused, right? I need to be in the moment at that time. The Fed raises interest rates. I think they're going to hopefully communicate that they're still data dependent, but they're thinking, you know, two hikes a year, maybe only give 1 hike a year. I think it'd be great if they just said, you know, once a year they're going to raise by 0.25%. The other thing I think they should do is stop paying interest on deposits. The problem is there isn't an economy in which that would really be good. So I don't know, maybe they stay capitalized until Europe gets their act together, right? Because you don't want to like decapitalize the US banking system and then Deutsche Bank goes out of business and brings everybody down again. So might as well just keep the US banks capitalized and wait. So there's a lot of things that need to be done. You guys know what I'm talking about? I suppose you would have had to have taken the Fundy course. The Fed currently pays on ER, pays an interest rate on ER and on RR. And that traditionally isn't the case. And the reason for that is if you don't earn interest, then you're going to want to not have money at the Fed. So you're going to like at least buy a bond with it. You know what I mean? You wouldn't have it in cash sitting at the Fed earning 0. So you're going to want to make loans. But if there are no good loans to make, at least buy some treasuries. And, you know, fill the left side of your balance sheet with treasuries. But having it parked at the Fed would make no sense. So anyways. So nice little setups here. So you have to decide what's going on, right? So like this is the daily chart. Now watch this 15-minute. Do you see the setup? let me draw the setup. I've done it like on 4 currencies already today. Oh, ooh, 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 and I was born. I was born to trade with you. Does anybody know that U2 song? Yeah, didn't think so. You're not a fan. You call yourself a fan, but you're not a fan. Got yourself a Joshua Tree album, you call yourself a fan. You're not a fan. You're not a real fan. Not if you do. Come on, Charlie. Who doesn't like you too? So lots and lots and lots of opportunities, right? And once again, I've been suggesting if you have a bias, you're not going to miss these things. You're not going to miss these setups. Now, the interesting part is that for others, you get yourself into sell zones. That's why you got to pay attention to your entries. So even if you're a bull, okay, you got to pay attention, maybe not risk too much. So like a bull, let's do it this way. Okay, a bull has it set up this way. And this is about, previous conversations we were talking about understanding, even if you're a bull, you have to understand where the bears are and vice versa. So a bull is going to do the double bottom higher high, right? 1, 2, 3 reversal with a 3, 8, 2 kicker. Maybe even a 6, 1, 8. But, we know that's the sweet spot in between those two gray lines for a bull. But we also know a bear is going to want to sell again, right? And so this is sort of that's their 618. Okay, this is their 50%. So they're going to be there. So very often when you see somebody trading, they throw down trades often because they're going to miss it. Oh, I'm going to miss it. Oh, I'm missing it. I'm going to get in. I got to get in. And instead of getting in low, they get in high, right? I don't know why people don't panic like, I'm missing the double bottom at the psychological level of 78,000. Like that's the one you should be aggressive getting into, because then your stop is just here, right? And then you zoom in, right? It came up 1, 2, 3 to here for you. Came up, Oh, copper just moved. Holy smokes! Oh, what just happened? Copper just fell off the face of the earth. What just happened? Holy crap! Let me check the news. Hang on. Wow, just like copper just boom. What the hell just happened to copper? Any other metals? Gold down a little bit. Oil down a little bit. Copper just like holy schnicker schnucker. I don't see anything. Yeah, it's just ridiculous. It's even going to cut through monthly and weekly pivots on the way down. Wow, so somebody's crushing copper. Crushing copper and an old woman dies. Yeah. Wow. Yeah, I don't know. I don't know what's going on. Amazing. No, a little bit of CAD weakness on it, but wow, look at it go. Copper's dropping again. Sorry. Well, what should we do, Wayne? What should we do? I don't know. Hang on, I'm looking around my charts. Nothing else really reacting to it. Aussie coming down a little bit, but only because it really should. USD CAD, nothing else is reacting to it. Gold or copper in and of itself is really coming down hard. The closest thing we have on here is gold and silver, right? I'm not a silver trader. Wonder if it just trades better. Silver. Looks like silver's having a bad time, huh? Well, I don't see anything. Gold is not doing anything. Just somebody's crushing copper, that's all. Algos, fat finger. It's not that much, but we went from like a monthly central to a monthly M2 in about a minute. So that's a lot. That's like hours and hours, maybe a day's worth of work in a minute. So something, but it's not the end of the world. But I don't see anything else moving as much as copper. But copper just, yeah. I'm telling you, move more in the last couple of minutes than 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, it did like a whole day's worth of action now. So it was just on the open? Interesting. So copper opened and it tanked, huh? What it opens at 8:20 in the morning? All right. That's all. The funny thing is we knew that the trade data out of China. So it just copper opens at 8:20 in the morning for trade and it tanked. Yeah. Boom. There you go. And yen tends to do that too when you get that kind of data. So, because again, remember what I was talking about earlier, flight to safety, or if you're invested in risky places around the world and all of a sudden you get like bad data like the Chinese export data, then what you do is you go to cash, but then you don't want to sit in cash, so then you buy treasuries, right? So you buy bonds, and Japan has the second most mature bond market in the world, so yen gets strong. Plus, a lot of people leverage with yen, so they deleverage. Yen gets strong. So, anyways, that's interesting. I didn't expect a dramatic move like that on the open, but there you go, translated there. Boom. How interesting. Did he? Just now, Zeal? Just. Logan, United States of America is the largest, deepest, most liquid, most mature bond market in the world. All right, so anyways, yen getting strong or Kiwi getting weak, even after that decent setup. We're heading into probably a 618 right now on that one. Aussie just kind of trying to wake up. US dollar getting strong at the moment. We're about 2 minutes away from weekly jobless claims. If you recall, we've been doing very well on that. We're at like a multi-year low, which is good. Recent cycle in initial claims was 247. Lowest since 1973. Ryan wasn't even born yet. Yeah. And I was knee high to a grasshopper. And here we are, foreign exchange arbitrageurs and speculators. Copper's still falling. Dollar strong. That's the only reaction I've seen since that drop. So let's move back to I can't leave that on silver. I'm gonna mess that up. Go back to gold. Actually, I was born to trade for you. I think I did it on this one, right? Kiwi yen. Yeah, there it is. Okay, 246, even better. Wow. SEP import, less than expected. Don't have full numbers yet. Canadian housing prices, 0.2 versus 0.3. No response in CAD yet. No real amazing news out of any of this. Just looking at all the different numbers. Housing, jobless claims, another good number. That's going to be pro rate hike. So we're at the lowest average since 1973, and we beat that average now. 246. 4-week average drops down to 249. Wow. Other than that, nothing really. Okay. Just watch Kiwi. It's in the zone. So down is good. Seems generally down, right? The highest, look at this, unemployment. Alaska, and then Puerto Rico, and the Virgin Islands. Why don't we just get rid of Puerto Rico and the Virgin Islands and solve some problems? Puerto Rico, I'll probably be in Puerto Rico in about a week. Puerto Rico, ho! Yeah, gotta bring my Rico Suave. New Jersey, California, Connecticut, Pennsylvania, yeah. Largest increases in initial jobless claims. Missouri, Penn, Ohio, Illinois is, Nevada, largest decreases. Michigan, good job. Georgia, woo, yeah. 923. Oh, was it 923 people got jobs? Amazing. So anyways, I know you guys read the government reports, right? You just can't help your awesomeness. Did you see the newly discharged veterans data in the recent Department of Labor report? Oh, speaking about Puerto Rico, when I was reading the recent Department of Labor report on weekly jobless claims, I was looking at this interesting trend. It just kind of gets you into the like, hi, I'm the professional mode, you know? They're like, I don't know what you're talking about because you're a professional. I don't want to read Department of Labor reports, so why don't I just give you my money and pay you to do it? Oh, yeah, okay. Yeah, gold bounced right where it should, right? So we'll see. Copper still neg, and then low side. Boom, boom. Thank you, Jimmy. Check it out. So here's what I was reading before. This is the lowest level for the average since November 3rd, 1973. All right. Amazing. For some of you, I bet you this is your first weekly jobless claims report you've actually seen. This is it. This is actually the report. It's now 5 minutes old. So if you guys were going to post analysis on Forex.Today, one of the things you could probably do is look at this PDF. First of all, you could put a link in your report. But second of all, you could probably like capture a chart here and put it as part of your analysis. So if you weekly jobless claims, these are people asking the government for money because they lost their job, right? How long ago was 1973? I don't even know how old I am. It's like 40 something, 40 something years ago, 43 years ago. I don't know. Yeah, I guess I'm 43. 43 years ago. So, you know, you're like, maybe that will give Fed the strength they need to get out of bed. And that could be something that you'd point to. Cool, right? Yeah. And so, like, James gives a link to CNBC.com about what they think about the report. You know, I'd rather you guys do this, like, just like, well, I read the report 10 seconds after it came out, and this is what I thought. Listen to this. There are this marks 84 consecutive weeks of initial claims below 300,000, the longest streak since 1970. Huh? Huh? By the way, I just got the email. So I also get emailed. Sorry, Department of Labor. I've already read it, but thank you for the email. By the way, you're 7 minutes late. I've already made and spent my millions. 7 minutes? You know how much money the finance minister of South Africa could steal in 7 minutes? Along with the help of the president? I mean, gee whiz, 7 minutes. That's a lot of time. That's the giant sucking sound of the rand, right? 7 minutes. So anyway, so hopefully this macro comes together. You never know. If this fails, I don't know, right? Then what? Range bound? Here's a mistake I see a lot in amateur traders. They see this as a head and shoulders pattern. Can you see it? If this falls, it's going to be a right shoulder. It's not a head and shoulders because there's no trend. It's not a reversal pattern because there's no trend to reverse. It's just, I don't know, it's just not a reversal pattern. If there was lower high, right, if there was higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, 100% retracement, lower high, lower low, that would be a reversal pattern. So a lot of people will see this and call it a head and shoulders, and I'm like, no, it can't be a head and shoulders because there's a higher high over here. So that's impossible. And that's where mechanical traders get into a lot of trouble because then they start doing like, wow, because it's a head and shoulders, then you got to take this to this and this to this and over to there, and it has to do that, and it doesn't quite work that way in the real world. All right, so if you are a bull, you want to keep it above 0.0. All right, so what bulls will do will buy it somewhere between 20 and 0.0. That's what a bull would do. Okay. A bear would have already sold it around 73.5. That's why we pay attention to midpoint cycle levels and stuff, right? And you can see that it even flipped sort of in here. So, a bear's already done it. A bull is setting it up, right? And amateurs are somewhere in the middle. I was born. I was born. Wow, look at copper now. Holy crap. Wow. Holy smokes. Copper just dropped another level down to the next pivot. Holy smokes. Wow. Big day in copper. Holy smokes, eh? But we've already played it out. Right, we've already played it out in currency. So I guess I'm making a big stink about nothing, but if you look at the USD yen, what it did, it dropped from what? 104.5 to 103.5. I mean, it dropped 100 pips, right? So, so we've already done it as currency traders. It's just makes me emotionally verklempt when I see like that was predictable in copper. How come I wasn't ready? I'm not a copper trader. But when I see that, I want to be a copper trader. Oh man, gee whiz, really? So write it down. Here's a way to wrap up today. Write it down. Next month, when Chinese export data comes out, I don't think it's going to be good. So therefore, if it comes out just as bad, A, you might want to watch the yen strengthen, and B, be ready for copper on the open if you're a copper trader or something, or at least make the prediction. At least, tell your buddy, you're like, oh man, why don't you watch copper tomorrow? Take my word for it. Then we'll walk away. Dude, shh. Keep this to yourself. But just after 8 o'clock in the morning, watch copper. You didn't hear it from me. But you didn't hear it from me. Wink, wink, nudge, nudge. Huh? That's a good one, isn't it? Because then your buddy's like, golly, that guy knows something. He knows people. Tell me, how did you know? And you say, well, I'm not saying it's KGB, but because I'll tell you, it's always the Russians. It's always the Russians. If you have nobody else to blame anywhere in the world, you blame the Russians. You're like, I don't know, man. I got screwed over. I think it was the Russians. Yeah. Now you got to go, you got to do the KGB or say like, maybe, you say, well, let's say a little birdie from the Israeli intelligence service landed on my window and they just know things. They're like, Israeli intelligence service? You're like, well, they're just well connected. That's all I have to say about that. They're like trying to connect all those dots. What do you mean? It doesn't make sense, does it? Hey, copper move. Enough said. Anyways, Trump's KGB, isn't he? Isn't he a mole? Trump's a mole, isn't he? KGB mole. I don't even know if he was born in this country. Oh wait, that was the other president. Oh yeah, yeah. So anyways, wow, what a wonderful day to be alive. What a wonderful day to be a currency trader. I am watching the 1, 2, 3s on this Kiwi and on the Aussie. Kitty CAD kind of. USD CAD, but it's the wrong way. USD yen might do it. Got some work to do, man. So peace on earth. May the pips be with you. May our profits be above average. Have a wonderful day.